Hi, I'm Nisha Khanna, and I'm here with Tariq Morshed of the Morshed Group at Sotheby's Residential Real Estate in Austin, Texas. Today we'll discuss what happened in Q1 of 2023 in Austin's market, what to expect looking ahead, and what it all means to you, whether you're a buyer or a seller. Tariq, welcome. We're looking forward to hearing what your team has to say today.
Thank you. Excited to be here and looking forward to sharing what we're seeing from the deep recon we do at the Morshed Group on our economy, the real estate market, and so on.
So, Tariq, what happened in the first quarter of the year in the market?
Well, Nisha, there's three main things to note for Q1 of 2023. Number one, the market ended up experiencing about 3 to 5% depreciation across Austin. So prices basically dropped about 3 to 5%, and that actually was very close to what we had predicted. But nowhere near the doomsday predictions of 20% down by so many national real estate experts like Goldman Sachs. And so considering 2022 ended flat after moving up 15% in value and then subsequently moving down 15%, this really just shows a lot of resiliency in our market, considering rates were at 6.5 to 7%, inflation, fears of a recession, and so on. So Austin's market is actually holding up extremely well in that 3 to 5% down for Q1. Number two, and a big part of why we only lost 3 to 5% in value, supply of housing ended up being at 3 months. And at a 3-month supply, we're really in a real estate market environment that is technically undersupplied by 50%. So for context, a 6-month supply, which would be about 18,000 homes on the market at any time available, is considered an equilibrium market between buyer and seller demand. And we would normally see 4 to 6% price rises in that environment. So at 3-month supply, half of that, which means there's only about 9,500 homes on the market, we're at 50% of an equilibrium market. So we really should be seeing prices rising versus depreciation. And because it was so tight in terms of actual inventory, we didn't see it be worse than the 3 to 5% down. And then number three, the other big thing kind of in Q1 is that buyers continued to gate buying out of fear. They're still calibrating around higher interest rates. There's a lot of fear about what might happen locally and nationally as in the economy, as well as even maybe fearful of the job market locally. So even though we were quite undersupplied in terms of housing inventory, buyers simply didn't move forward on homes with these factors at play, leading to some depreciation when, again, normally we'd see some strong appreciation at only 3 months supply. So then, homes on average sat on the market for 70 days. And in conjunction, sellers ended up averaging about 89% of list price, meaning the homes sold about 89% of list price, which is down quite a bit from the pandemic years. So, to kind of share a real world example of these factors that I'm talking about, this home right here in Westlake Hills, which is a really sought after area, about 15 minutes to downtown, beautiful rolling hills, large lots, great schools if you have family. The average price in that area is about $3.5 million. They range from kind of 2 million up to about 10, 12 million. This newer construction home, which is about 3,800 square feet, and originally started at about 3.9 million in January. We showed it to one of our clients, and after our analysis, felt that it should be priced around 3.7 million, given the quality of finishes, views, and location. So, it actually ended up dropping price in early April, and then now is at about 3.6 million. So really close to what we were thinking it should sell at, and we feel like it's a great value at this number. And we've even showed it to a few clients since, but they're all choosing to wait out the market just in the same way that I was just talking about these factors.
So Tarek, what's happened so far in Q2?
Well, so far in Q2, buyer sentiment is moving to, like the market's not going to crash here. As predicted, job losses, or as we predicted in the beginning of the year, job losses have been quickly absorbed and the net losses have been lower than expected. So we're also starting to see the early signs of buyers starting to accept that rates aren't going to come down hugely anytime soon. And so combined activities slowly but surely picking up across the market, because again, those two things are making buyers feel like, well, things don't seem to be terrible here.
And how do you think things look for the rest of 2023?
We're holding the line on our prediction and that we'd put out at the beginning of this year, which is that June or July this year will probably be the bottom of a soft landing for Austin's real estate market. Again, buyers at large will realize the market really isn't crashing here, and we expect things to get busier after Q2, as well as price drops and negotiability decreasing. We're thinking prices will come down another 3% or so, but likely that's it, and it may not even get there. And we think the market's going to be poised for appreciation heading into 2024. And, there's several reasons why we believe it won't really get much worse than this. Number one, jobs are really the main engine in our real estate market. And, here are some things I don't think people realize locally and even nationally. Austin saw 50,000 jobs being added last year in spite of all the bad economic news, which is much better than most cities. And for 2023, so far, job losses have been quickly absorbed, given kind of that continued race for quality talent. And so the 6,000 jobs that have been lost, that's a lot lower number than anybody expected in the economy. And really, 6,000 jobs kind of represents about 0.5% of all the jobs in Austin. Which means, unemployment, that rate is only at 3%, which is a really healthy rate. And so this has been a big part of why supply has remained at the low 3 months number. And additionally, we're on track to actually add about 45,000 jobs this year, which is also above average. And we're actually number 2 in job growth this year per the Wall Street Journal. So again, jobs being such a big part of that is really holding us up. Also, population growth for 2023 was expected to be around 60,000 people per the city demographer Lila Valencia, and we're close to that. We're tracking for about 50,000 people, and hey, all those folks need housing. Not that everyone's going to buy, some will rent, but certainly some will buy. And then finally, anecdotally, Austin's ranked number 2 in the most preferred market for real estate investors in 2023 per CBRE. So investors are going to stay active in this market also.
So Tarek, what does all this mean for sellers? What should they be doing or thinking in this new market environment?
So for sellers, we're continuing to see that pricing and separation from the competition is paramount. Homes priced so they stand out from the competition, combined with all the upgrades today's demanding buyers seek, are still selling. They're moving in about 2 weeks to 30 days. If you're not both of those things or only one of those, you will sit and have to price drop till the market sees you as a value play.
What about buyers? Should they be buying now or waiting later in the year or even in 2024?
For buyers, we just believe right now is the kind of absolutely the best and last timing for the best timing. But by the end of July or June or July, the rest of Boston's going to figure out the market just isn't crashing here. And likely most of the job cuts will have happened by then, or Q3. Also, buyers will have financially and psychologically calibrated around these higher interest rates, and rates will actually start inching down towards the end of the year. So when you put all that together, buying now while others aren't to pick up best pricing just really makes sense, and we think we're getting close to that last window.
Tarek, this has been really wonderful information, and we really appreciate all the education. Thank you so much.
You're welcome, and welcome. It's always a pleasure and just really fun for us to provide market insights with our analytical approach to the market. Also, please go to the morshedgroup.com for past market updates and just lots of information that we post monthly. And we'll look forward to the next market update.